There are differing opinions from analysts as to whether or not they think the final bull market move in gold is going to be during this 8-year cycle, or maybe the next 8-year cycle after this one. In my opinion, it seems pretty clear it's occurring during this 8-year cycle. And I'll give you my rationale for saying that. So, for one thing, I think a lot of this is somewhat being driven by the years of suppression in the metals market. When that broke back here in early 24, when the banking cartel was unable to drive gold back below 2,000, then it unleashed this massive short squeeze in the gold market. And so, I mean, you can see this move here is unlike anything that has come before. And this rally has been, or this bull market in gold has been ongoing since 2000. You can even make a case since 99. The first stage of the bull market was an exceptionally powerful move from $255 to a little over $1,900. And then we had a cyclical bear market and attempted breakout. Unfortunately, it came like too late in the 8-year cycle to really get a sustained breakout. And so we ended up anyway with this cup and handle. And then we completed the bottom of the handle with the next 8-year cycle low, which occurred in late 2022. And then, again, we tested these highs and we got, lots of suppression again to try and block block gold from breaking out above that level. And I made the call at the time when it happened there that, when they failed to drive gold back below 20,000 or 2,000, and then we get the breakout, is like, I said at the time, that's the end of the cartel suppression in the gold market. It wasn't the end of the suppression in the mining stocks or silver, but it definitely was in the gold market. And you can see the character of the rally has just changed, and this is unlike anything that has come before. Now, if these are intermediate degree corrections here that I've got outlined with the pink boxes, if these corrections had been more, like an A, B, C move and deeper, pulling back further towards this 200-week moving average, then I might be in the camp that it's going to take another 8-year cycle to get to the final bubble top, but they're not doing that. They're transitioning into these sideways consolidations, and then after 2 or 3 months, then the next leg up unfolds, and then instead of a significant correction, we get another sideways churn. I was expecting that this intermediate correction would be one of those deeper pullbacks, maybe something that could take gold back down to 3,000 or even 2,800. But we're I think 11, maybe 12 weeks into this correction already, and it's not doing it. It's turning out to be another one of these sideways consolidations. And so that would suggest to me that we are probably starting, or I guess you could say we did start the bubble phase here as we came out of this 8-year cycle low. And that's the way most of these things unfold anyway, is you'll get a multi-year cycle low that kind of gets everybody on the wrong side of the boat, builds the fuel for the move, and then you'll get the initial liftoff out of that 8-year cycle low. It's usually fairly powerful. This one was, and then you'll get a breakout, some kind of a major breakout, and that kind of kicks off the move. And I've noted a couple things to note. First off, I think most of you know the rule here that the bigger the base, the higher in space. This is I think this was a 13-year base. So this, based on the size of this basing structure, this has a lot farther to go. In my opinion, based on the size of this basing structure, 13 years, minimum target, in my opinion, is somewhere between 8 and 10,000. Probably, I would bet higher than 8. You know, if I was going to make a prediction, I'd say probably closer to 10 than to 8,000. And of course, you're going to have some time for the declining phase of the 8-year cycle. Another characteristic of the bubble phase, I guess you'd say, they generally last, once the public kind of starts to take notice, they generally last about between a year and a half. That's about how long it takes for the general public, you know, the Tom, Dick, and Harrys of the world that really have no clue what they're doing. All they know is that their neighbor's making a lot of money and they want to make a lot of money, and so they, you know, people just start copying what other people are doing, thinking they're going to get rich. So I would say once we cleared 3,000, the general public is maybe getting close to taking notice. I would say once we go above 4,000, the public is going to take notice in earnest. And then at that point, we've probably got a year to a year and a half to go. And that's usually in that last year. It's not unusual at all for an asset that's in a parabolic phase to double or more in a year or less. So if we get to 4,000 and that starts to bring in the general public, we could very easily in the next year and a half get from 4,000 to 8,000. And gold is a much, the metals anyway, are a much thinner market than something like the stock market bubble or even maybe even Bitcoin. So a lot more volatility. And I don't think it's at all unreasonable to think that we could get to, let's say we get to 4,000 by maybe sometime in late summer, early fall. And if we've got another year and a half to go, I think it's not unreasonable to think that we could get to 10,000 by, let's say, 2027, maybe early 2028 at the earliest, and then that gives us time for the, at some point, of course, the bubble will pop and you'll get the huge crash down into the next 8-year cycle low, which would be due in about 30, something like that. So as I said, I'm not really in the camp that's going to take another 8-year cycle. This just doesn't look like we're not really climbing the wall of worry at this point. The angle of attack is way too steep. This is not the kind of move like this where we're not stretching terribly far above the long-term moving averages, and we're getting normal corrections along the way. That's not this. This is something different. And it looks to me like this is probably the beginning stages of the final couple of years of the bull market. And so I think price is going to continue to appreciate rapidly, and it'll probably get more aggressive as we get further along in this 8-year cycle.